IBM. Viewer request. IBM, what is up with that trend? The trend is such a simple concept. I think as humans, we always try to overcomplicate it. This is pretty much the simplest I could get. Line, moving average. I could even remove the price. And when you see the trends in your favor, stage 2, when the trend, as represented by the 12-month moving average, goes sideways, there's an indecision, a change, a distribution, and then after that, stage 4. And it's pretty smooth on the 12-month moving average. A lot of the noise is avoided. Doesn't always look great, but sometimes you have to zoom in. This is monthly candles, guys. So this stage 2 trend was just for, you could have bought at, I don't know where officially there, maybe here off this breakout. Never quite the bottom, but you could have ridden this for September 1st of September 2010, and the trend ended pretty much here at this candle when it closed below it 2 years later. So that's pretty sweet, guys. One trade in, one trade out. 2 years, and you see your nav go entry at 133, 134, exit at 194. Where we are today. Here is always. Okay, here's a closer pattern. Whoa. Just like that. It actually gapped. I could even bring it here. It kept making lower lows, not quite horizontal breakout line. But the pattern is definitely, implied measure move has been reached. Whoa. Right here. Has it? Oh. Or very close to. You had to go through this important, and it just ripped through it. This important monthly defined support went back down. So how is that shaping up, guys? Wow. Okay, see that? That's insane. Almost like a cup and handle, but inverse. I don't know if that's there's such a thing. But right now, you could actually have crazy bigger pattern. Bring that all the way back down here. Close to the 2000, that's insane, 2002 lows. Right around here. Else, use what I call the price considerations, target considerations. So if I know that my price target is going to hit some natural resistance right here, it's kind of, you want to exit, I would cheat, lower my risk to reward entry and not insist on that swing rule. I might have misread the swing pattern. I might have, might just end up short because it's running through. I like when I have swing targets that stop right before areas of support. I believe I increase my chances of having a successful trade, hitting my profit limit, getting out before I start getting whipsawed, and maybe price action sinking through all that support and reaching my target, which was implied by the move. But that's just insane what I'm seeing here. What else? This is not descending channel. Whoa. So definitely downtrend because, well, we have that 12-month moving average going downwards here. Price action below 12-month average. I'm trying to identify, trying to imagine what could possibly happen next. This important support here at the 124 level, 122 level. What could I imagine happening is right now a pullback. Maybe sink through that, and then after that support and resistance, bring down the price action, bring it back down. If it's not as strong as it is, then the price action is actually going to go back up and go test more recent tested support resistance right here, and then after that we'll see if it goes up or it goes down. Either case, it's going to take more time. Either case, lower lows, lower highs, lower highs, lower highs, lower highs. Here it's just a lower high accelerating the downfall. And the 12-month moving average, yep. So here, I don't know if it's gonna go back all the way up to 140. It could, along with the SPX now, which has resisted the 2630, closed above it for October, and I think it's gonna try to do another run back to previous highs, but I don't think it's gonna make it. And after that, it might get pierced through its 12-month moving average and then come back down. So we'll see how much time is going to happen for if it's going to have enough 1, 2, 3. Time moves on, man. Could take 5-6 months before it hits back that support, that resistance, and then after that, go back down. Then after that, another test of this bigger pattern, and then crazy measured move, added down here, bringing it down to these lows. And that's it, guys. We don't know what's going to happen. Oh, I see here. This is a lot of congestion right here. Yeah. So this previous resistance turned support all the way here. It was super duper important. See, it had a really nice bottom pattern right here. Applied measure move. And once you had that breakout, you had that target that was reached 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1 year later, got a crazy nice swing rule. And usually the swing rules, but they're always a little short of where you would exit with the stage analysis. Sometimes it coincides. There's a reason all these things sometimes align. You look at somebody's trading framework and they're using Fibonacci and retracements and pitchforks and name what. They're all derived from the price. And you'll often see, your price target's close to mine. And you're entering pretty much where I thought that it was breaking out, and a lot of similitudes. Don't judge anybody's framework. I just become critical if they don't have risk money management, and that's kind of a little shady there on their part for their long-term health as a trader. But other than that, a lot of stuff, man, it overlaps. We speak different languages, but we all trying to communicate. So that was reached, and now this is important. You see that 130 level, it went through it, but it might try to go back up. All this is a zone of support right here. Resistance turned support, a wall, and all the way down here to the natural, more recent tested support. Downtrend, but possible pullback in the way. Okay, we're going to zoom in on the weekly and look at all these crazy nice circles. Compared to the SPX, wow, underperforming the SPX, always underperforming the SPX. Sometimes you're above your 30-week average. That's why it's not completely red. But pretty shaky on the weekly. Lots of ups and downs. Stage 4, trying to go back up. Stage 4, okay. And now we're definite. What are we? Stan Weinstein style. Stage 4. Weekly defined breakdown line. If not this one actually gapped down. 30-week average going downwards below the Ichimoku cloud. So that's overhead resistance. There's no support underneath. We saw on the monthly that we're under the monthly breakdown line. Whoa, is that a red candle? Yeesh, that's not nice. So now we have all this weight of evidence, all these little signs. That is a lot. Big red candle right there. Big warning sign. Severely underperforming the SPX. All right, what could I see happening for our friend IBM? Yeah, so this through average going downwards, maybe a pullback up to here, maybe to the breakout line within 1 to 3 months. And if it's done on contracting green volume, then after that, we're going to have great opportunity to short. Because on the monthly, this is we're a complete downtrend. and we might get back up here to this breakdown line, and then we could have a continuation short, guys. Oh yeah, man. All right, that's it for IBM. You should not be in the stock right now. If the 30-moving average is going downwards, the 12-month moving average downwards, you should not be there. Not necessarily a short. Short, either you cut on the breakdown here, or we're going to wait on the pullback for a better risk to reward ratio, and make sure we have even more evidence that this is it's just a pullback and not a full-blown correction. All right, guys. Thank you. And subscribe. All right, guys. Bye.